market cap 50 million, share price circa 5 cents, over 1 billion shares out. That's the standard Australian thing, isn't it? Why do Australians do that?
Well, it's two things. The biggest thing is we don't have a reason here not to do that, in the sense that if you were to compare the Australian approach with the Canadian approach, both companies on both exchanges, they operate the same way in that they have a level of success, hopefully, they issue more shares. They need to go to the next level of success, whether it's feasibility studies, etc., they issue more shares. That dynamic doesn't differ at all. And in fact, in the last few years, ASX has been far more bountiful for resources, investors and companies than other exchanges. The difference is investors in Australia, they really hate consolidations or reverse share splits. They don't like the effect that it has on their sense of value. They don't like the effect that it definitely has on liquidity. And there's too many examples where companies might undertake a consolidation and someone pulls the shares out of the bottom drawer, thinks that they've tripled, and in fact the share's still where it is. They just got a third as many. So there is no incentive, and there's a strong disincentive to consolidate registers. So we just don't do it, and it doesn't bother us. However, what I'm learning on Twitter at the moment is that it does bother North American investors a lot, and they seem to think that somehow management must be horrendously negligent to allow a share count of 1 billion shares.
Well, there you go. Like I say, US versus the world again. Now, talk to me about your share register then. You've got, well, about 40% seems to be retail, and you've got a couple of big names in there, and the usual kind of high net worth, etc. The board's sitting on 8%. You were heavily vested. You continue to invest?
Myself, no. So I acquired a substantial position, at least for my own financial circumstances, when I came in as CEO. I do have 50% of my package is paid in equity that is performance weighted, and it requires performance hurdles to be achieved. But there's just too much going on in the sector for me to be in the market at the moment. We do have strong board participation, as you've noticed, but I think the other thing that is interesting about our register is, despite being a micro cap and still being at about that $50 million level, we've got very unusual levels of institutional support. So about 34% institutions, including those big names that you mentioned, and a number of specialist uranium funds, which of course makes me very proud, but I think also gives investors a lot of comfort.
Yeah, okay. And what sort of hurt? I mean, given the position of the marketplace and not much is moving, what type of performance targets are you talking about?
So our employee incentive plan that relates to all employees, it's 50% judged on KPI performance and 50% judged on total shareholder return. Right. So we take Bannerman against the basket of peers. We exclude, obviously, the more beta-related company, so we don't compare ourselves against the share price growth that you would get from a UPC or a Yellowcake or a Kazatomprom or a Cameco or even some of the producers. So we are competing against companies that have got active exploration programs and so on in the uranium space, and only if we outperform those companies do we benefit from the EIP.
So I guess it's not much happening at the moment because no one's doing anything really at the moment.
Compared to what it'll be like in a couple of years, I'll certainly agree with that.
There you go. Okay, fine. I'll take that. We'll get into the board in a second. So why don't you? Well, I think you spent a bit of time sort of describing the market in the presentation. I think we've had a lot of interviews about that recently, plus you've been quite good at describing that. The one page I did quite like was, and I think you just alluded to it, was the financial players in the space. You know, you've got Tribeca on board. In the UK, it's got Yellowcake, but there seems to be a few more of these types of funds starting up. That's, I guess, indicates that people's perception of where this market's going to go. Would you agree?
Absolutely. So it's both being created by sentiment and reinforcing positive sentiment. As I think my deck sets out, if you go back only 12 months, there were only two players in space, and that was UPC, who've been around since the early stages of the last boom. They've done 11 raisings in their life and raised something like 645 million Canadian dollars. And Geiger Counter Fund, based and listed in London, who invest in equities, including Bannerman. So just in the last 12 months, the increasing sentiment behind the bottoming of the uranium sector and the expectation of a bull market has driven demand from contrarian and really early adopting smart money to fund these different groups. And you mentioned Mike Alkin, who is an extraordinarily intelligent voice in this whole sector. So he runs a Sachem Cove Partners Fund, which are disclosed as an investor in Bannerman, I'm proud to say. L2 Capital out of Brazil, tapping family office money in Brazil with Marcelo Lopez. I'm proud to say he's disclosed that he's a Bannerman shareholder. I mentioned the Geiger Counter Fund, Oklana Asset Management out of Singapore. They're Bannerman shareholders. They're in their specialist uranium fund. You talked about Tribeca as well. And there are others who haven't voluntarily disclosed, and so I'm not privy to disclose that on their behalf. But I think the big news as well is that we've just seen overnight the first ETF that's been formed to track the new Scholastic Pure Play Uranium Fund Index. And I'm also very proud to say that Bannerman has made the cut for that. And we're one of only 7 Australian listed companies, including some of the big ones like ERA, that are included in that index and therefore will be included in the ETF. So what all of these do is they create new opportunities for capital to enter the market that otherwise would either find the sector too small. So that entire Scholastic index is only about $15 billion, which includes Cameco, Kazatomprom, UPC and Yellowcake. But it also provides other risk-tolerant investors with the avenue to invest in the broader uranium thematic, which is very important. So as I say, it was started by a positive turn in sentiment, but very much exacerbating the increased sentiment through the capacity to draw in new funds from unusual corners of the investment community and start deploying that directly into both physical commodity and also equities.
It's quite interesting. Yeah, I did catch that earlier this week. So I think that is interesting because, in fact, here's one for you. We're talking about investment into companies such as yourself. Okay, this shows for retail investors, high net worth family offices who perhaps not quite sophisticated as the institutional investors, primarily because they can't get access to the information. So if you were one of those guys, I mean, what type of exposure would you have to uranium? You've got obviously equities, you've got physical, you've got ETFs, I think, getting a slightly better rep, hopefully. I mean, what would your, not advice, but what would you do?
Okay, so if I was running a family office,
there you go. Better, well done.
I didn't have you or me to make uranium picks. What I would probably do is heavily weight something like an ETF, and then have a couple of serious alpha picks outside of that. And whether it's an ETF or whether I'm putting my money with someone like Mark Alkin would really just come down to very finely balanced risk tolerance decisions. Yeah. Someone like Mike Alkin, with his extraordinary sector knowledge and amazing due diligence and ability to think in detail but at a helicopter view, I think that offers, in fact, superior risk management to just taking an ETF, which needs to invest via a robot. However, you're never going to be criticised for buying buying IBM in the form of investing in an ETF. You just need to pick the macro, and then whatever happens in the ETF is what happens. So I think there's a role for all of those. But the point that I'd make, though, is the moment you're at any scale as a hedge fund or a family office or in high net worth, it becomes difficult to play in the alpha space because there just isn't much value out there at the moment with the uranium sector being on its knees.
So by alpha, you were talking about the large producing companies, equities?
Well, I guess that probably depends on your definition of alpha. I'm talking multiple returns, the sort of returns that made some investors quite famous during the last boom.
Would you agree that the 232 announcement has kind of frozen the contract market because utilities are trying to work out what side that's going to fall on? Is that a...
No question.
No question.
For 18 months it's done that, because we saw the petition issued in January last year, a long period of uncertainty before a decision was made to take up the investigation by the Department of Commerce. And what we've seen now is, because the decision is just around the corner, potentially as little as days away, but more likely several weeks away, it's frozen all sorts of activity. The traders, they don't have any balance dates coming up that they need to be careful of closing positions, so they're under no requirements to buy. The producers, they've got the inventory cover to hold over this period, so they don't need to buy to cover lost production. The utilities certainly don't need to buy in the next few weeks. So we've really come to the sharp end of this uncertainty, because the decision will be made and it will become public within the time frame of almost every conceivable procurement decision in this market. And I think that's why we're seeing a drifting spot price, because despite that overhang paralysing the buying, there are still small pockets of owners of U308 that do, for whatever reason, need to sell. And when they're selling into an illiquid buying market, that will, of course, put pressure on the price to where we see today.
Right, okay. So a few things there. And again, I kind of want to get into talking about Bannerman here. So I guess at the moment, the price is binary. It's either going to be economic or it's not. So it doesn't matter whether it's at 18, 25, or, well, maybe 30. Some people might be able to make it work. It doesn't matter until the price moves, and the price isn't going to move until the utilities get certainty, and that's around 232. And to them, it doesn't matter which way it falls. They just need certainty. They just need to know what the moving parts are to be able to make decisions about go forward contracts.
I certainly agree with that, and it's an interesting point. Because there is some perception amongst investors that it's about picking winners and losers ahead of Section 232 result. I don't buy that. Yes, different results will potentially benefit some companies over others, and there are some scenarios which will actually be detrimental to certain companies. But for a company like Bannerman and most companies out there, the result cannot be negative, because there's been 18 months of uncertainty that's hung over the sector like a wet blanket that has stopped all sorts of procurement decisions and all sorts of trading liquidity. And as a result of that, just the sheer action of that uncertainty dissipating will produce market activity for certainly everyone's benefit on the uranium side of the equation.
Yeah, I'd agree with that. And so talking of which, I want to, I'm looking at your page 12 on your presentation, and everyone can get that from your website. The questions I want you to answer will allow me to work out, are you one of the companies that's going to survive? So I think I agree with you. There will be lots of winners, but depending on how long the price takes to ramp up, there may be a few people who fall by the wayside because they may not be able to raise money cheaply or efficiently, and that that's something that I guess there's lots of conversations going on, and they don't have the cash flow to survive another 6 months, let alone 12, 18 months. So in here at some point I'd like your view on where you think the spot price is going to go and over what timeline, because I think very few people can tell me that, and I just wondered if you had an opinion.
Well, I can't tell you that, but I do have an opinion.
Great. Let's have that. We won't hold you to it.
And I'm one of those potentially foolish commentators out there who's prepared to proffer an opinion.
Okay.
And I've done that, you might know, quite consistently over the last couple of years. And I think my foolishness is encouraged by the fact that I've got it right more than I've got it wrong. So what I foresee in terms of a spot price is closing the year between $35 and $40. That is enough growth from where we are today, below $25, to get the attention of the more important sectors of the market that are going to drive it in the following year in 2020. it will shake away some of the perception that exists amongst utilities that we have another 3-4 years of flatlining prices. And it's that perception that has led to them relying on their dwindling inventory cover and also the ability to secure contracts in the future at what they presume would be similar pricing to today. But it's probably a bit south of where many of the uranium bulls are hoping to get to in that time frame. And what I would say to support that prediction is that we do have a situation where Cameco has almost entirely been out of the market this calendar year. They still have a need of between 10 and 12 million pounds that they need to secure by the end of the year. I think if they saw the right circumstances, they'd be happy to secure forward some of their 2020 production. And it just for various reasons, it makes absolutely no sense for them to sit there as a buyer of last resort in the high 20s. However, if they have the opportunity to be buying at the sort of prices we're seeing now, they can make a good financial return when you compare that to what they'd be then selling that into their contract portfolio for. And equally, as we start to see an increasing momentum in the uranium price, Cameco aren't going to be averse to supporting that momentum because of what it means for the medium-term growth of the value that they achieve from their contract portfolio. But Cameco aren't going to do that into a dead market. That just would be naive. So we have Section 232 resolved. It'll take a little bit of time for people to understand what that really means. By September, we have the World Nuclear Association Annual Symposium, and that's very unique because you have a whole wide-ranging number of people from all these little different niches of the industry who don't normally talk to each other and certainly don't understand each other's part of the business, getting together and finding out what the hell's going on. So that's important both from a uranium point of view and having a wide discussion around what the resolution of Section 232 actually means, but also when you pull all of the little bits of news and all the snippets of developments from around the world together, it paints, as I said at the beginning, a very, very positive picture of the immediate growth prospects for nuclear. But many people in the industry, they're so hard at it doing whatever they do on a day-to-day basis. It takes something like World Nuclear Association Symposium for that to be surmised and presented to them before they realise, wow, it's back to the good days. So the combination of those factors in September, I think, will start to produce the environment that we need for confidence to come back initially into the spot market. Once we start seeing that momentum, I think it's reasonable to expect Cameco and other producers to get behind that. And if we see the $30 psychological barrier breached earlier in the year than later, then I certainly see that momentum continuing through $35. And if we see that psychological barrier breached before the WNA symposium, then I think we're looking at the upper end of the range that I've just articulated.
Thanks for that. That's either very brave or very foolish. I'm not quite sure yet. We'll find out.
Ask me on 1 January
exactly,
and I'll tell you.
Exactly. But that's kind of interesting what you said about the symposium, because if I listen to some of the narratives in the marketplace, people are talking about collusion's a terrible word to use at the moment, but there's people talking about price control, price fixers, price makers. People with alternative business models to the rest of the market. But you were talking about a kind of collective set of discussions and decision making, which will, once there's some agreement as to the way forward, certainly after 232, the price will very quickly uptick to $35-40 by the end of the year.
Yeah, and I would describe it more as a collective consciousness. It's a collective acceptance about where the nuclear industry is going in both the short and medium term, and therefore what that means for both buying decisions in the uranium and nuclear fuel cycle, but also producing decisions. I've heard some of the commentary around manipulation or influence and so on, and you know what, Matt, I just don't buy that. I've been in the room with Cameco right to their most senior leadership, the same with Kazatomprom. I spent a lot of time with those guys. They are exceptionally careful and respectful of antitrust guidelines and all of the negative implications that could come with that. So I think it's a simplistic view to say that there's someone trying to be a puppet master here, and that in some way they either have an agenda to suppress prices or to support prices. The reality is Cameco needs to buy the stuff. It's in their interest to buy the price up because their contract portfolio is floating and 60% exposed to an increased spot price. And that's all you need to know about it.